Welcome to our PPP 2.0 webinar brought to you by Earth Yellow Pages, operators of Washington Yellow Pages, Alaska Yellow Pages, and 100 business directories. We've put the information together because it's important for business people to know there's an opportunity with a new PPP program to be able to take advantage of some of the resources that have been made available to help small businesses who are dealing with this COVID disaster. The name of the new act is called the Economic Aid to Hard-Hit Small Business, Nonprofits, and Venues, so it's not quite as great of an acronym as the CARES program, but let's take a look at what the opportunities are for small business relief. It's part of the Consolidated Appropriations Act of 2021. This was a huge, biggest act ever put through Congress. Had 5,500 pages altogether. 500 of those pages deal with this act. So there's various components that we're going to address because there's different types of opportunities available for small businesses that have been impacted by the coronavirus. The key components of the act include the PPP second draw loan. I'm going to refer that as PPP 2.0. There is the targeted idle program. There's an extension of the SBA guaranteed loan debt relief program, as well as targeted programs for the hardest hit and disadvantaged businesses. So we're going to be talking about all of those. All these resources are available. If you go to EarthYP.com, you'll find that there's a link right on the page that will give you the outline of this class as well as the application form that will be necessary in order for you to file. They started the filings the first couple of days. Friday and Monday will be dealing with very narrow band types of businesses. The full program really opens up on Tuesday, so you're very timely in terms of getting this information together. We've got the resources for you, instructions on how you can get into the front of the line. Let's look at eligible businesses. If you have one quarter in 2020 where your revenues were at least 25% or more below the corresponding 2019 quarter, you qualify. You can't have more than 300 employees, and you must have or will use the full amount of the initial PPP program. All businesses that were eligible for the Payroll Protection Program 1 will be eligible for the PPP 2.0. So you had to be in business by February 15th, 2020 in order to be eligible for this program. And the loan limit in this round is $2 million. Now, if you receive funding from the earlier program, the combined amount of money that you can receive is $10 million. So if you receive $9 million in the first one, then you would only be eligible for $1 million in this one. So they've limited the amount in this program to $2 million to be able to open it up for more businesses. The loan is going to be based on, just like it was before, 2.5 times your average monthly 2019 payroll. So that's the same as the PP1. However, if you have a business that has been severely impacted, such as a restaurant that begins its NAICS code with 7.2, it's 3.5 times. So if we take a look at the original act and how the repayment was, in the CARES Act originally had a 1% interest rate. You had 2 years in this first column here. You had 2 years to pay it back. There was a deferral for 6 months, and it covered an 8-week period. Payroll expenses had to be 75% of what the money was being spent on, and non-payroll expenses were 25% of the loan amount. Well, they saw that there were some problems with that, and on June 5th, they passed the Flexibility Act that modified the original terms and gave more choices and a better payback period. So it was, again, a 1% interest rate, but now the payback was 5 years with a 10-month deferral, and you could look at spending the money over a 24-week period because in some cases, some businesses had to lay people off and weren't able to spend the money in that 8-week covered period. There was also an adjustment as far as the amount that had to be paid towards payroll expenses. So it was decreased from 75% to 60%. Non-payroll expenses were increased to 40% of the overall money borrowed. So the final impact was 1%, 2 to 5 years. You could elect either term. 10-month deferral period. You could choose either to spend the money over an 8 or 24-week period. 60% of that had to be spent in payroll expenses, and 40% had to be spent in other non-payroll expenses. Some of the changes on PPP 2.0 included there was additional eligible expenses that were added outside of payroll. These included operations expenditures such as software, cloud computing, HR, and accounting expenses. So if you had a QuickBooks that you were using, you could deduct that expense, so it opened those up. Also, if you had any repair expenses, we saw as the riots and everything were occurring, if you had expenses that occurred that weren't covered by insurance, you could also spend the money on that. Supplier cost has been modified as well. So supplier costs that were essential to your business can be included as additional eligible expenses. Worker protection expenditures. So if you were buying some COVID-19 face masks, shields, if you were a restaurant, you had to add some outdoor seating, things like that in order to comply, those could be added as well. Any employer-provided group insurance cost could also be added as a result of this modification. It was clarified as well so that there was no question about it. Now, the other thing that was changed was that whereas before the computation on what was available was based on W-2 employee expenses, now there are additional expenses that can be incorporated into the overall loan amount. And specifically, if you're the owner of an LLC or some other entity and you pay yourself on a draw monthly, quarterly, or whatever that might be, that can now be added to the payroll expenses, whereas before those costs were not eligible. It was only the W-2. So you can include that in your PPP loan out calculation. And in addition to that, you can actually go back and ask for an increase because these changes were made retroactively. So if you're an original loan application, you did not include those expenses and received an amount accordingly, you can actually go back and add those numbers back in order to increase the money that you had already received. So it's a second bite of the apple. You can go back and this time you can include those additional expenses in calculating the amount of money that you'll get on your 2.5 times payroll and other related expenses. In addition to that, seasonal employees were more specifically defined. If you're operating no more than 7 months a year, you're seasonal, maybe a ski resort, something like that. You can also go back and do the calculations. If you earned no more than 1/3 of your receipts in any 6-month period during the prior calendar year, then you qualify as a seasonal employer. You can use the highest 12 consecutive weeks of payroll between February 15, 2019, February 15, 2020 to calculate the loan side. So this has been opened up quite a bit. 501c6s are now eligible. Nonprofits can't have more than 15% of your revenue coming from lobbying efforts. Where this could come into effect is organizations like the Chamber of Commerce. You can't spend the money on lobbying efforts, but those C6s that were not eligible in the first round can now go back and receive money under the PPP 2.0. So the loans, there's a short threshold and timeline on this. You need to apply right away. They're just opening up the programs effective next week, and the loans will be available through March 31st, 2021. So some organizations are already receiving some of the earlier applications. So you want to hurry up, get with your banker. That's where these are going to be done. There's also some online resources that we'll be sharing with you moving forward. Now, some of the other elements relative to the PPP forgiveness is that there is now an increase in the really short form forgiveness documentation that needs to be provided. With the new rules, any loans that were originally made less than $150,000, which was 85% of all PPP1 loans, now can use this short form for forgiveness of the loan. It's a one-page certification and identifies the number of employees you were able to retain, the estimate on the amount spent on payroll, and the total loan amount. You also have to attest to the fact that you use the funds for allowable expenses only, and they'll issue that form within 24 days of enactment. So that form isn't even ready yet. We should see it here in the next 3 weeks, and then you'll be able to use that for forgiveness of the earlier PPP1 loan that you got and turn the loan into a grant. grant if you had spent it in the eligible areas. The EIDL program, the EIDL, this was a grant program that extended through December 31st, 2021. In order to qualify, the business must be located in a low-income community, and you find that out from your local banker. You need to have suffered an economic loss greater than 30%, and you've got to employ no more than 300 employees. It repeals the EIDL advance deduction from forgiveness. Those already forgiven will be made whole. What this basically means is that originally when the PPP1 program came out, there was a rule that said if you got this EIDL program, then you couldn't take money twice on both programs. That's no longer true anymore. This does not count. The grant does not count against the PPP program. You can actually get both of these pools of money to help your business. The targeted advances to eligible entities grosses up the difference between what was granted before. This gives you up to $1,000 per employee on up to $10,000 on this grant, and provides those that did not get the money last time, they've added some additional funding so that if you had applied but you didn't get it because the funding had run out, you now would be eligible for this money. So you need to get it after it, apply for it quickly. You got to have no more than 300 employees. And as I mentioned, the forgiveness element, you'll be made whole if you'd already submitted and they took the grant out of your PPP1 eligibility. You'll now be made whole. So you can get both of these chunks of money to be able to help your business. Businesses must qualify as an eligible entity under the CARES Act. Small business, co-op, ESOP, a tribal concern with fewer than 300 employees, individual who operates as a sole proprietorship with or without employees, or as an independent contractor or a private nonprofit or small agricultural co-op. Business has to have been in operation by January 31st, 2020. Businesses must be directly affected by the COVID-19 with no more than 300 employees. Another program of funding that is available is the SBA Guaranteed Loan Debt Relief Program. That you apply through your local lender. This new program guidelines pays an additional 3 months of principal and interest on existing SBA 7A loans, 504 loans, and microloans. So beginning February 2021, if you have gotten money on these SBA loan programs, then they can reimburse you up to $9,000 per month is the cap for 3 months. And then with certain businesses, with certain NAICS codes that have been particularly hard hit, you can receive an additional 5 months of principal and interest payments. Once again, this is capped at $9,000 per month. The designated NAICS codes that are eligible for those additional 5 months of principal and interest payments are shown here on the screen. They're also in your downloads as well, but 61, 71, etc. You can see them for yourself. Now, the Guaranteed Loan Program pays 6 months of principal and interest for any new SBA guaranteed loans approved before September 30th, 2021, so you have plenty of time to apply for this, plus the 3 months after the first 6 months of payment. So it's gotten even more attractive. As I mentioned, 5 months if you have a qualifying NAICS code. Improvements that have been made to the SBA 7A program include there's increased SBA loan guarantee. The level's been raised to 90%. It was at 75%, so that makes these more attractive for the lenders to provide them. And they've reduced or eliminated some of the fees associated with these loans. Now, there's also another program that grants for shuttered venue operators, and this new act provides up to $15 billion for SBA grants to companies like theatrical producers and talent representatives, operators of live venues, theater, etc., live performing arts organizations, museums, or independent motion picture theaters. This is not designed for these large nationwide chains of theaters, but the small independent picture theaters are eligible. The new act requires that there must be a demonstration of a 25% reduction in revenue, and it could be up to $10 million with a potential supplement of 50%. There was money set aside in the last PPP program that was never used. If you're involved in any nonprofits or theatrical local theater, it really makes sense to get them active in applying for these funds that are available to help them. $2 billion is set aside for those with less than 50 employees, so those smaller theater groups can take advantage of this. Now, the timing of the grants, the initial 14 days, the grants will be exclusively made to those with 90% or greater revenue loss. Then the next 14 days will be those with 70% or greater revenue loss. Then after that, all the rest of the grants can go out for other organizations. If you receive this grant, you can't participate in the PPP 2.0. So you don't get both. It's one or the other. So you have to take a look at it and see which one makes the most sense depending on the organization. The focus on disadvantaged businesses programs specific business segments that have been particularly hard hit by the COVID disaster that we've been going through. These include child care providers, transportation providers, and rental assistance programs as well. There's also been a resolution of tax issues because there was a question of whether or not we had to treat the money that was received as income. Could we write off the expenses? So the new rules are retroactive and basically clarify this. Expenses that were paid by PPP funds can be claimed as business expenses. It resolved the IRS and Treasury guidance that this would constitute double dipping, so it kind of overruled what they were thinking. So you can write them off as business expenses. It makes the language retroactive as if it were included in the original CARES Act. In addition to that, the recent guidance was that lenders were to issue 1099 forms to borrowers who benefit from this program. That is no longer the case, so it's not like you're going to be having to characterize that as additional income for tax purposes. It makes the language retroactive, which is great. So the timing to apply: businesses must qualify as eligible entities as defined by the CARES Act. The SBA will begin accepting all applications for PPP 2.0 on Tuesday, January 19th. Some of the earlier small business, disadvantage, etc., were given kind of a 2-day head start, if you will, but we're early in the process. You want to get your application in sooner as opposed to later. You got to go through a bank or a lender. When you do, the bank will ask you questions similar to those on the official form, the 2483-SD second draw. That form can be found on this PDF, but you can also go to EarthYP.com. We have a link on the front page that takes you right to an overview of this program, as well as the form that you can download as well for the application process. So it's pretty straightforward. We're going to take a look quickly at what that form looks like so you have a sense of the kinds of questions that you're going to be asked, but you have access to that form off of our website as well. So here's what the form looks like. You can see the information that they're going to be looking for, and as I mentioned before, this information is, and this form is on our website. Just go to the front page of EarthYP.com and click on the PPP link. So it gets into what's your average monthly payroll. Are you affirming that you're going to be using it for payroll costs and these qualified areas? You show the quarter and the reduction of your gross receipts from one quarter to the next to show your eligibility. If you're an owner of 20% more, then you just put it in there. You own the whole company. It's real simple. And then you take a look at all of the various yes and no questions. Have you ever been in trouble with the SBA, etc.? And then there are some instructions that you're certifying that all of these things are accurate. You've made a good faith effort that all these informations are true. And that's basically it. It gets into the instructions after that, how you're supposed to fill it out. If you have any questions, it's right here. And that's what the 6-page form looks like. So it's pretty straightforward, not real complicated. Half of the 6 pages are really about the instructions on how to fill out the first 3 pages. It's quick, it's fast. There are online companies where you can do these online. We did that on the first draft and it was done very quickly. We didn't even go to a bank, so if you need some help in figuring out who you can talk to, we can certainly give you some information and give you some sources. We'll be applying for ours on Tuesday. We were successful the last go around, so I'm excited to know, as we looked at the legislation becoming final and the president signing it, there will be some more sort of evolving clarifications, but the act has now become law, so we know what the rules are. It's not that difficult to get. It shows up in your bank account in fairly short order, so there's probably going to be quite a bit of attention. But we want to move on this fast. There's no reason why you can't get your application in next week. There are, as I mentioned, online companies that are pre-taking these. So you can fill them out the next couple of days if you want to. We can give you some resources. We'll put them up later today on that page so that you can see where you can go out and apply early, so that when they open up the gates on Tuesday, you can be right at the beginning to be able to take advantage of it. So thanks for coming today. We're going to be replaying this webinar next week as well. But if you have any questions, just go ahead and send us an email, and we'll be adding an FAQ section to the resource page itself. Thanks for coming. Thanks for participating. And we'll look forward to additional clarifications. Keep an eye open for additional webinars as we see any clarifications, modifications, or opportunities. We'll be sure to let you know, and we'll do some additional sort of update webinars on any new changes, modifications, or clarifications. Jerry Royce, EarthYP, operators of Washington Yellow Pages and Alaska Yellow Pages, thanking you for coming in today, thanking you for being on our directories. We're seeing increased traffic as people have moved and changed their business models under COVID. We've seen substantial increases in terms of our traffic. Last month we had over 5 million visitors in Washington alone. So if there's anything that we can do to help you with your business, adjust to the digital age, please let us know, and we'll look forward to talking to you very soon.